Happy Friday, traders. It is Friday the 30th of January 2015. It's 8 a.m. Chicago time, 9 Eastern. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. You can probably hear that I'm fighting a cold all week. It's been an interesting week. Let's look at the So what we've got that could be influencing our day today. Google, a major component of the S&P and the NASDAQ. Revenues have a small miss. They come in at 14.48 billion versus 14.74 billion consensus. Earnings per share at $6.88 versus the expected 7.11. The stock was down about a half a point in the after-hours market. Visa, component of the Dow and the S&P, revenues came in at 3.8 billion versus 3.38 billion versus 3.34, so slightly better. EPS comes in at $2.53 versus 49 cents, so it beat by 4 cents. It announced a 4-for-1 stock split. The stock is up 4.5% overnight. Amazon, which is in the S&P and the NASDAQ, earnings per share beats the 18-cent consensus and comes in at 45 cents for once. And revenues, a small miss, 29.33 billion versus 29.68 billion. It's up 11% after hours. Other than that, the Eurozone had its December unemployment rate, came in at 11.4 versus 11.5, so slightly better. This was the lowest unemployment rate for the Eurozone since August of 2012. Also, Eurozone January advanced CPI missed. Year on year came in at negative 0.6%, expected negative 0.5%. The core year on year 0.5 versus 0.7, so both worse. And here's where the miracle of QE might kick in and change that a little bit for those guys. The Wall Street Journal reports that Yellen, in a private meeting with Senate Democrats, Senator Schumer says Yellen told Democrats the economy's better and expects no rate increase immediately. Ties in with the patient premise from Wednesday. The Fed's on a holding pattern. This morning, Q4 advanced GDP annualized. Q on Q comes in at 2.6 versus 3, slightly worse. Personal consumption comes in at 4.3 against 4.0 consensus. Advanced GDP price index comes in at 0 versus 0.9 expected, worse. Core Q1, core PCE Q on Q comes in at 1.1 in line. So a mixed bag of stuff overnight. Very interesting movement on the S&P in the Globex session. We'll take a look at that in a second here. Looking ahead, 15 minutes after the open at 8:45 Central, we have the Chicago PMI number expected at 57.5. Prior is 58.3. Remember that this is a private number and it's a subscription number that comes out early to members, even though it's listed at 9:45. You may start seeing a reaction at 9:41 Eastern or 8:41 Central. So don't wait. If you have a position on and you don't have enough cover or scale, my suggestion is to stand by from 8:40 or 9:40 Eastern, from 8:40 Central on until the number comes out. It goes to members first. At 9 o'clock, we have final University of Michigan confidence expecting 98.2. And then at 11:45 Central, we have Fed's Tarullo, a voter on macroprudential policy. Not sure what that is. Let's look at the technical picture right now. Familiar chart. Real quick, a rundown of what we did yesterday versus what we expected. So yesterday, when the trader bite was done, The market was in the meat of this lower HVN from Wednesday. Wednesday was Fed day. Fed announcement came in right here, and the market sold off. We opened right here. So my my hypothesis on the trader bite was expecting a chop and a battle here on the open, and if anything, if any responsive buying comes in, since we had a point of control that was in line with the prior day's value, which means that despite the sell-off, the market kept most of its trading in balance, and so there is a high risk of there's a high potential of responsive buying to come in. I also went over the composite and showed what has happened in the past when you have 40+ point days, and that the market kind of retraces those, has been retracing those for quite some time. And so the expectation is for responsive buying with the initial test of 2011, 50, the value low of this high volume area. And if it does not hold the 2011 50 as the initial resistance area, or the area to defend by the sellers, we have 2013 50 behind it. It's a CLVN. It's also the low of Tuesday, and barring that, once it gets into value, we're looking for 2023. That was one play. The second play is that it tries. It chops around, it tries higher, and it moves lower to 1980. And the expectation was for a continuation. I mentioned that in yesterday's video. We're expecting a continuation of this impulsive move, so that it can extend itself to exhaustion. And 1980 was the target for that. Below there, I mentioned 1956, 75 as the key target. Below, there's some confluence in this area, and some important levels down here between 52 and 48, along with the CHVN. So the bottom line is, if we take 2011 50, we expect it to test 2023 at some point. It did not do that. It did push through, and overall, it was interesting. It went right to the MCV-POC. If you look at the MCV-POC, that from the all-time high, it's 1850. I mentioned that yesterday. I didn't emphasize it. I didn't think it would be very much in play as part of yesterday's session, but that's basically what we went. Where we went, we opened, tested lower, and then moved back up. Very bullish action yesterday. However, in the overnight session, essentially the market's voting the other way. We open, we have a continuation move, which is expected given the way we closed yesterday. If you look at how this market closed, it really closed right at the extreme. So what we had yesterday was a neutral extreme day type. Neutral extreme day types generally indicate a change or a reversal in opinion, and generally get follow through the following day in the direction of the extreme. And we didn't do that. It just opened. It did take out the prior high, which is okay. But overall, it's just during the Asian session, it just was down but sideways, and then it crossed this key LVN zone at 2,175 left behind yesterday, and to me that's just troublesome. It pulled right back to it, bounced up 7 points, and then has fallen below it, and most of the volume has moved down here with the point of control, the overnight point of control, at right at that LVN, the key LVN left from yesterday. LVN stands for low volume node. It's where there's little consensus or little trading happening, indicating to us that that's an unfair price. And in this case, the key LVN would act as an over underline and a key level for us from left behind from yesterday, a key artifact, and the market's below it. So very odd here. It looks like we are likely to test this 93 point of control from yesterday, and that's where value is. Value was not able to move yesterday and remain near the lows, it's just to me, this is a very whipsawing action. If we look at the weekly profiles, this is an important chart right now. If we look at the weekly profiles from the time we made the all-time highs, you can see where the 1850 plays. This is the current week. This is all sessions. 1850s key in this area, and we've just basically, you know, dropped, had a week running up, and then this week we've basically dropped down and run up, and are trading on the downside of that at 2000 currently. So overall, very, very noisy trade. And it's been like this since the end of October. That's why I have that big micro composite starting on October 31st. And I've been monitoring it. I can pull this back to that and show you where that 2060 comes from. Here it is, 2060. And you can see that we've really traded a lot in this area. There's heavy volume. There's 73.18 million contracts that have traded in this composite so far, not including this week, and it's really exaggerating the balance that is there. So my anticipated play for today was that it would continue through to the point of control, the naked point of control above at 23, and it would start making its way up higher into the next area, which you know, we have to get through the 28, which is now also a heavy volume area. But I was looking for it to get back up into the 48, 49 area by the end of this week, and it just isn't doing that today. Today, the primary hypothesis, given the way we have traded and the fact that we have had this sell-off, if we zoom out a little bit and see what we've done, we have had the sell-off. We have had a higher low here. We did have a nice pop yesterday, pretty decent volume and delta volume on the move up, and now it's trading in the 2000 with the 2001 50 being the key LVN. It looks to me like it would be a noisy opening this morning in the high volume. It's likely to test 1993, take out the overnight low to fulfill that stat, but I'm expecting an inside day today. That's a primary hypothesis. So I'm looking for, again, 2011 to be tested, 1150, 1175 or so to be tested again. And this could extend all the way down to the 87.75 area again. I'm looking for this market to be stuck here today. This does not apply if there is news that comes out and pushes us around a little bit. You know, that changes things. Repricing the market because of a fundamental change or a geopolitical change is not something I can account for except through my stop losses and risk plan. So that's how it is. But right now it looks like it's going to gyrate here at the open, and it's likely going to test 93 and make new overnight lows, and then it might find buyers stepping in again to take it back up the flagpole. This is our MP chart. This is where we ended up yesterday. So we have singles above us that we have yet to test. Again, the 2001 50 is one, and then the 2010 50 area or 2011 area looks pretty decent on the upside. A quick, I know people have been asking me about crude oil. Crude oil is not operating as expected. It just cannot find buyers, steady buyers. It looked like it was going to steady up here as it pushed back up, and was having several days, 3 days here of back and forth balance. It looked like it was balancing, and it looked like it was time for it to climb back up and retest the upper areas, 48, 50, 49, and all it's done is continue to slide lower. It is advertising lower prices, not finding, it's finding buyers on these pops. So you can see here, quick pop up on Wednesday. We had a nice run up on yesterday, but it's not managing to hold on to these higher prices. The market participants in here expect supply to continue to be high. The numbers on Wednesday were really high. and it's just this is a pretty strong intermediate to long-term trend that has developed, and it's still in control. It just does not seem to be finding buyers to stabilize yet. Not that I want it to stabilize or whatever, but it would be nice for it to consolidate and then give us a chance to hop on before the break for a nice swing. This here is the Euro Stoxx 50. I talked about this the last couple of days, and I said that this has pushed all-time highs this year, and it's in balance. It's in a very wide LVN zone. This chart goes back to the 20th of June 2007, and there's an LVN zone up into the 3550, and it's been consolidating, and this is perfect action for consolidation here. So you have an up day, down, then you have down, then you have the next day taking it all up, and then this morning taking it down. A nice balanced kind of consolidation area, and 3370 is your key acceptance price. I'm expecting this also to be stuck in yesterday's range for today. I'll leave you with that. I'm out of time. I'm over by a minute. I want to remind you again, as usual, it is Friday. This is what I used to tell my prop guys all the time. It is Friday. Don't let the market burn a hole in your pocket. Don't lose control. Don't ruin your weekend. Stick to your plan. Fridays are tricky because you have people who don't want to carry positions into the weekend, and there's a tendency for the action to close to kind of slow down early, and there's also a tendency for people to want to avoid having a loss into the weekend, so they fight even harder. And we're not here to fight. We're here to align ourselves with the market. Think of this like surfing. It's a lot like surfing the ocean. As a surfer, you don't get to dictate which way the wave goes. All you can do is detect it, align yourself with it, get up on your board, and let it ride you as far as it can go. And there's no way to predict how far it'll go, where the next wave is going to come, but you can see that there's movement in the ocean, and one is starting to develop, and our goal is to align ourselves with it and minimize our losses. Strap our board to our leg and hang on. If things go wrong, hang on to the board, and that's basically our stop. So just as long as you stay away from the rocky part of the beach and you keep yourself aligned instead of pedaling into waves, pedal with them. That's our goal. Good luck. Take care.